So you're looking to become 99% better than the average person learning how to trade. In this video, I'm going to give you some tips on how you can actually achieve this and become a top 1% trader. If you want to know exactly how I did it, then be sure to check out my mentorship linked in the description of this video. Pretty much my whole strategy, Discord access, everything you need to become a profitable trader, it is down there in that course, so be sure to check that out. But without further ado, let's get into step one. Step one, you need to master the fundamentals of trading. You need to know about risk management. It sounds very simple, and people obviously know about risking 1%, don't lose more than 5 trades in a row or in a week. The actual aspect of risk management needs to be adjusted based on your strategy and on your performance as a trader. If you're someone that has a 30% win rate, you're not going to be able to use the same risk as someone that has a 90% win rate. They know that out of 100 trades, they lose 10, so they can adjust their risk accordingly to this. You need to use your data to adjust your risk. If you don't know what risk to use, backtest. Backtest risking 1%, risking 2%. What are your drawdown periods like? Would you be able to trade funded accounts with this drawdown, with this risk amount as well? These are all things which you need to take into account when you are choosing your set risk to actually use. Another fundamental which people overlook a lot is actually journaling. You need to journal every single trade, whether it is a missed trade. I feel like these are very, very important. Whether it is a trade that has won, gone straight to the take profit, journal this. Or if it is a losing trade. You can actually learn a lot from your winning trades and the trades which you've actually missed. A lot of people don't actually see this and they just try and journal the losers because they lost, so they must have done something wrong. But I feel like you can learn a lot from your winners as well. Another basic that people need to understand is market structure and directional bias. So a lot of the times people, they could have the right entries, they could have the right strategies, but they're just on the wrong side of the markets 9 times out of 10. And this is fine, but it does discourage people from continuing trading or continuing with that strategy, but it's not actually on the strategy. It's just on how they are determining whether it is bullish or bearish. It's a very, very simple fix to this. Has price broken structure? If it's broken structure on your set time frame to the upside, if it breaks structure, perfect, we're looking for longs. Obviously there are certain types of structure breaks, everything like this, where you can go into detail like I do in my mentorship, but that's basically the simple way of looking at it. If it breaks the upside, it's bias. And the last fundamental is having trust in your strategy. If you've backtested and you've done all the previous steps, you know how much you're risking per trade, you know how much you could potentially lose, and you have trust from your journaling or from your previous trades, then why would you second guess any entry? Why would you second guess a setup, or maybe even be tempted to risk less than you normally would? This is just shows that you don't trust your strategy, you have no confidence in your actual trading ability, and it will show in your results. And a good way to actually build this trust is by moving on to step 2, which is mastering your strategy. I feel like the best way to actually become profitable is by sticking to one pair, one time frame, one session, and just absolutely mastering it. It sounds stupid because people say, oh, well, if I can trade a setup on one pair, then I can trade it on every single pair. But I feel like it's just better to master one. If someone said to you right now, what's your favorite pair? Would you be able to be like, oh, it's this one? If you only trade one pair, it's very, very simple. And the pair that you actually trade most often should be one which you are most profitable on. If you're not as profitable on another pair, then why would you focus time on that pair as well? I feel like if you learn one pair and just continuously backtest, trade that one pair, you can find it a lot easier to actually find setups and know when not to trade. And I just feel like in having this in combination with the one pair, one setup, one time frame, all falls into place nicely, and it's a very, very simple way to trade. The most important thing as a trader is knowing when to trade, and more importantly, when not to trade. I feel like knowing when not to trade is drastically more important than knowing when to trade, because if you don't know when not to trade, you're going to constantly be looking for setups. If you don't see something which you actually like, or if you see something that isn't part of your plan, isn't part of your execution type, then simply get off the charts and go and do something else. It's as simple as that. If you don't find something that fits your plan, what are you doing on the charts? You're just inviting yourself to take entries which you wouldn't usually take. And you want to get to the stage in your trading where you don't even need to look at your plan. Obviously, it is good to continuously reference your plan, but you get to the stage where you look at the chart and immediately you'll see, okay, will there be a setup today? Or will there be a setup in this session or within the next hour, depending on the time frame which you actually trade? And if the answer is no, and you can see that immediately, perfect. If you have to go through different time frames for half an hour to see if there is a potential setup, I feel like you don't know your strategy well enough to the point where you have mastered the strategy. I can go on the charts right now on GU and I can immediately see if there's going to be a setup, just based off how many hours I've actually put into that pair, how many years of data I've actually seen. I know every single market condition, how it trades in those conditions, whether I should even bother trading in those conditions when the market is maybe consolidating, my strategy doesn't work as well. So I know if it is doing that sort of price movement, then I just simply stay out the markets, because I know that I'm not as profitable and I will most likely lose. So I just stay out. And that is very, very important, knowing when to stay out of the markets. It's all good exposing yourself to risk when the strategy is falling into place, lovely. If the plan is all 5 confidences, tick, 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 or tick, 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 enter the trade. If it's not, stay out. Moving on to the next step, and this is to know exactly what you want out of your trading. And this is very, very important, because a lot of people go into trading with unrealistic expectations. They'll go in after seeing a TikTok ad, an Instagram ad, and they'll immediately want to have the lifestyle, or they'll want to become a full-time trader after seeing the so-called trader lifestyle. So these people that get into the markets like this, if they're only putting in 30 minutes a day or an hour a day, and they're expecting the same results as someone who was studying or testing strategies for 6 hours a day, it's very, very unrealistic. And if you're going into trading knowing that it's only going to be something that is part-time, maybe a side hustle or a hobby, then this is fine, because you're not expecting the results of someone that is doing it day in, day out as a full-time job. But this is good because you understand that, you know exactly the results which you could potentially see from the amount of work you've actually put in, and that's fine. But the people that go in there, put in minimal effort and expect maximum results, it's just very unrealistic, and they're setting themselves up for failure. The amount of times I see it where people put in very, very few hours, don't get the results they actually want, and then end up calling trading a scam. But if you actually put in the hours, you make loads of money, and this is a result of the hours you've actually put in. So moving on to the next step, and this is to create a solid process and routine. And these kind of go hand in hand with each other, because if you have a solid process, it will just become part of your trading routine. The importance of routine, you need to know exactly when you're going to be trading, so you can base your lifestyle around that. So if you're trading, in my case, 8 to 12 a.m., you know to wake up before that, so maybe you can have breakfast. You can have breakfast before you actually start trading, because there's no point going on the charts and then you're really, really hungry, you haven't eaten since yesterday evening, and now you need to go get some food, but it's in your trading hours, you might miss a trade. So simple solution, wake up half an hour before the session, eat your breakfast, sort out whatever you need to sort out when you wake up, have a shower, and then get on the charts. You need to have full 100% focus during this time, and having a routine makes this a lot more simple. Going to sleep at the same time, waking up at the same time, it's a very, very easy way to get in that perfect routine so you're fresh and ready to focus in your trading hours. And having a set process for your trading is so important. When you get on the charts, you open your trading view, you open your MT4, or you open your journaling software wherever your trading plan is written down, have that alongside your charts. You need to know exactly what to do next. You don't want to be flicking through pairs, flicking through time frames. You need to look at your plan. Maybe you have it as a tick box every single day. Tick box for your whole process for your trading, so you know exactly what you're doing. You want it to be pretty much copy and paste every single day. And the more simple it is, the better the results, because you can't make as many mistakes. So a little example of this, you could say, look at 15-minute directional bias or 15-minute market structure. So okay, you look 15-minute, what is the market structure like? Is it bullish? Is it bearish? Have we had a break of structure? Are we going to break structure? Is it looking like it's going to break to the upside? These are all things which you actually need to take into consideration. Also, these are things which you can actually note down in your journal. Let's say you have a template in your journal. You go in there, okay, what have I seen with the market structure? Is price bullish? Have we just broken to the upside? Note this down. This is very, very important. You're noting it down, so then you can look back in the future and see, okay, so this was a really, really good day. What was the market doing when I did my market structure check? Then you can notice, okay, this is what happened, and then this was a very, very good trading day. If you start making mistakes, you can also look back. What was I doing on the bad days? What was I doing on the good days? you can learn from this. Then you want to see exactly what you want to do for entries. So price is broken, the trade is now valid. How do you get an entry on this trade? Let's say you're trading with support and resistance, break and retest. Price is broken, now you mark out the zone to retest. Note down the zone you want it to retest into, the stop loss area you're looking to put your stop loss at, maybe it's below a previous low or below a wick or something like that. And then also where are you targeting on this trade? And if you have it noted down, instead of just having it in your mind, you're a lot more likely to actually stick to the plan. So I feel like anything you write down physically, or whether it be on a computer, typing it down, you're a lot more likely to follow this than if you are just keeping it in your mind for, okay, well, I said this level, but I actually think it's going to go to this level. Whereas if you have it written down, targeting this level for this reason, you're a lot more likely to stick to it. If you look over and see, oh, well, I think I've changed my level, then you see the reasoning behind that. It's a lot more easy to actually stick to this. And then you need a process for managing the trade. A lot of people can get in winning trades, they can be profitable traders, but the way they actually manage the trade is very, very poor. They'll close out because they can't handle seeing that much profit in their account, or they can't handle seeing large numbers or floating in however much profit. It could even be floating in that much drawdown. But I feel like people are more inclined to hold till stop loss than they are to hold till take profit, because seeing that money floating in profit and then seeing it maybe drop a little bit, this is very, very tough for a beginner trader to actually deal with. Because let's say you're running £30,000 in profit, and then it goes down to £15,000, they see this as losing £15,000, but because it is all unrealized profits, you haven't actually lost anything, you just haven't realized the 30k in the first place. And if you have this system in place where you know exactly how to enter the trades, how to manage the trades, and how to journal them after, and it's a copy and paste system that you can just replicate every single day, then you're going to see success in your trading. And the last step, you need to remove all distractions whilst you're in the zone trading. Phone, put it on do not disturb. If you have Twitter open and you follow traders, you don't want to see other traders' ideas. You don't want to see notifications popping up that could distract you from your trading. Maybe you could see something, or you could speak to someone and you start getting stressed. This could obviously affect your trading, affect how you're managing your trades, affect the decisions you're actually making in your trading, which will result in less money being made. You need to be very, very careful what you actually do whilst you're trading. It doesn't seem like it's going to affect you. It doesn't seem like to a lot of people that it's even relevant at all, but I do feel like it's very, very important what you're actually doing outside of trading and how it can actually affect your results in the long term. So if you are a profitable trader and you have any more tips for people, be sure to leave them in the comments and subscribe to the channel, and I'll catch you guys in the next video.